क्या बोलते मित्रा लोग, क्या बोलते दोस्त लोग, क्या बोलते भाई लोग। बकचोदी नहीं आती अपने को। चल पढ़ाई कर साले भोसड़ी के। हाँ, अनसर्टन सोल चैनल का नाम। देखना पढ़ाई कर रहे हैं और कुछ नहीं। हाँ, सप्लीमेंट्री नोट्स, राइट्स, ओएफएस, एफपीओ, आईपीओ, ओएफएस and FPO. How are they different? IPO, initial public offering, is when a company is introduced into the publicly traded stocks markets for the first time. In the IPO, companies promoters choose to offer certain percentage of shares to the public. The reason for going public and the process of an IPO is explained in detail in chapter 4 and 5. The primary reason for going public is to raise capital to fund expansion projects or cash out early investor. After the IPO is listed on the exchange and is traded in the secondary market, promoters of the company might still want additional capital. There are three options available: rights issue, offer for sale, and follow-on public offer. राइट्स इशू, राइट्स इशू मतलब यार मैं कल पढ़ लिया था थोड़ा। राइट्स इशू मतलब ऐसा रहता लाइक जो ऑलरेडी शेयर होल्डर्स है ना, लाइक मेरी कंपनी शेयर होल्डर्स है आईपीओ वाले। तो आईपीओ वाले मतलब जो भी अपन ने आईपीओ डालने के बाद जितने भी शेयर होल्डर्स हैं, हम उनको एक ऑफर देंगे कि तुम्हारे पास एक प्रपोर्शन में तुमको एक्स्ट्रा शेयर देंगे फॉर कैश, एक्सचेंज ऑफ कैश। लाइक मैं बोलूँगा तुम्हारे पास 5 शेयर है तो 5 शेयर के बदले मैं तुमको एक शेयर दूंगा। 10 है तो 10 के बदले दो। बस हो गए। 10 5 के बदले एक, तो एक शेयर उनको थोड़ा डिस्काउंटेड प्राइस पे मिलता है। पढ़ लेते वैसे। The promoters can choose to raise additional capital from its existing shareholder by offering new shares at a discounted price, generally lower than the market price. The company offers new shares in the proportion of shares already held by the shareholder. For example, 1:4 rights issue would mean that every 4 shares held, one additional share is offered. Although this option looks good, it limits the company to raise the capital from smaller number of investors who are already holding shares of the company and might not want to invest more. Right issue leads to the creation of new shares that are offered to the shareholder, which dilutes the value of previously held shares. Okay. An example of rights issue is South Indian Bank, which announced 1:3, one share for every 3 held. Issue for rupees 14, which is lower 30% lower than the market price the stock was trading. The bank offered 45 lakh share to the existing shareholder. The rights issue is covered. The promoters था क्या अभी 11 चैप्टर में भूल गए साले। ऐसे ही रहता है, इसलिए वो 10 बार देखना पड़ता अपने को। राइट्स इशू, ओएफएस, ये मुझे देखने का मन नहीं है। तो क्या करूँगा यार, आईपीओ में पैसे डालने का मोस्टली, बाकी अपने को बस पॉइंट ऑफ व्यू बनाना है स्टॉक के लिए। ओएफएस, the promoters can choose to offer secondary issue of shares to the whole market. Unlike rights issue restricted to the existing shareholder, the exchange provides a separate window through the stockbroker for the offer of sale. The exchange allows the company to route funds through OFS only. Only if the promoter wants to sell out their holdings or maintain minimum public shareholding requirements. अच्छा, ये कुछ तो भी है रिक्वायरमेंट। Promoter want to sell out their holdings and or maintain public shareholding requirement. Government PSU have a public shareholding requirement of 25%. There is a floor price set by the company at or above which both retail and non-retail can make bids. The shares are allotted if bids are at a cut-off price or above, will be settled by the exchange into the investor demat account in T plus 1 day. An example of an offer for sale is NTPC, which offered maximum 46% shares subscribed. ठीक है. FPO. An FPO also has the same intent of raising additional capital after it has been listed but follows a different mechanism for applying and allotting shares. Shares can be diluted and fresh shares can be created and offered in an FPO. Just like an IPO and FPO, an FPO requires that merchant bankers be appointed to create a draft red herring prospectus which has to be approved by SEBI, after which bidding is allowed in 3 to 5 days period. Investor can place their bids through ASDA. These shares are rated based on the cutoff price decided after the book building process. Since the introduction of OFS, FPO are seldom used due to the FPOs are seldom used due to the lengthy approval process. The company decides on a price band. An FPO is publicly advertised. Prospective investor can bid for the issue using the ASBA portal through internet banking or apply online through bank branch. After the bidding process is complete, the cutoff price is declared based on the demand and the additional shares allotted are listed on the exchange for trading in the secondary market. An example of an FPO is of engineering. Difference between OFS and FPO. An OFS is used to offload promoter shares while an FPO is used to fund new projects. Dilution of shares is allowed in an FPO leading to change in shareholding structure while OFS does not affect the number of authorized shares. Only the top 200 companies by market capitalization can use OFS route to raise funds, while all listed companies can use FPO option. Ever since SEBI has introduced FPO, shares have come down and companies prefer to use OFS route to raise funds. The 20 market depth level 3 data window. I have driven a car for many years and I even changed my car a few times now. Each time I changed my car, the engine remained more or less the same, but the feature within the vehicle and its aesthetics continually changed. Air conditioner, power steering, power window were all luxury features in the car at one point, but today I guess no one buys a car without these essential features. The game changer for me though was parking assist. The little camera at the back of the car gave me complete visibility of the parking space available. I was no longer required to pop and twist my head out and struggle to park the car, nor did I have to bug my co-passenger to get down and help me navigate my way into the parking spot. The parking assist feature did everything and helped me execute a perfect parallel park Parking assist feature was my age for hassle-free car parking. I feel the same age while trading the market with level 3 data. Level 3 or 20 market depth feature is a unique and has multiple uses. You will probably appreciate the level 3 market window if you have traded at an institutional desk. ये क्या है बे? Level 3 or 20 market depth feature is unique and has multiple uses. You will probably appreciate level 3 market window if you have traded at an institutional desk. A regular retail trader will not understand this feature anytime soon simply because this feature was unavailable all this year until we introduced it for the very first time to the Indian retail traders. The purpose of this chapter is to help you understand how useful this feature is and get you started on building trading strategies around this feature. If you are entirely new to this, I will suggest you read this blog to understand what level 3 data is all about, assuming you know it. The chapter will help you understand the multiple. Over the many years trading, over the many years interacting with traders, I have constantly heard complaints that institutions have a big edge over retail traders due to lower trading costs, better platform access to level 3 data. With our technology and with our partner startups through the Rain Matter initiatives, we have not only bridged this gap but have given retail traders an edge over institutions with better products and pricing. In the same spirit of the democrat, democratization, 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 democratization. I'm super excited to let you know that we are now ready to give you all access to level 3 or 20 depth market data for the first time in India, probably the world. भी बड़ा मैसेज खाली कर दे. Normally, when you check the market depth for any script, you see the best 5 bids and offers. This is also called level 2 data. How are we bringing this to you? The normal data feed that you see on the trading platform is provided to the brokerage firm by the exchange, which is then streamed to the clients. The default is 5 market depth, which is typically updated up to 3 times a second. We are fortunate that Indian Exchange give data feed for free for trading clients of their members, unlike in developed market where trading clients have to pay for it. Many exchanges also have premium data feed. Many exchanges have also premium data feed called tick by tick. As the name suggests, this data stream gives you every single change in the price of bid and ask and all trades on a script. This data stream, as you would imagine, needs exponentially more bandwidth to stream out of the exchange, which is not technically feasible. The exchanges have created space within their premises called the colo for colocation, colocation, where they share their data feeds with participants who lease servers. Being in the colo also means faster updates on the data feeds Until now, large institutions brokerage firms who trade high frequency arbitrage. Until now, large institution brokerage firms who trade high frequency arbitrage, market making, and such other such latency sensitive strategy using algorithm were the one consuming this data feed. Our new system sits within the exchange pool and consumes large volume of real-time TBT data, converts it into 20 depth for retail consumption, compress the data, stream it to a data center over a dedicated leased line, from where it is streamed to kite to our user. How is this useful? This adds significant value to active trader or those who intend to trade large quantity by giving them insights that is not available on the standard limit market depth view. Knowing where the most number of bids and asks are placed incrementally across 20 depth as compared to 5 can be trading edge. Access to 20 depth can also help reduce impact cost on large orders. And of course, level 3 feeds tick faster and dealer move quotes. Check this example of Yes Bank 70 calls. When the stock moved 30% and trading activity spiked. With entry depth, you can see demand and supply almost across the entire price range of the calls. We can not only figure where potentially there could be support and resistance on price due to higher bid asks, but also get an estimate of the price at which your larger order could get executed. Contract availability. For the option traders, 20 depth order book gives great visibility into the availability of contracts to trade and help identify better price points. Execute these trades. With this visibility, it becomes really hard to trade illiquid. Without this visibility, it becomes really hard to trade illiquid contracts. While I'm specifically talking about options here, you can extend this to future contracts as well, especially the illiquid ones. Let us put this in context and have a look at the regular market depth. We can see narrow bids on the right and a notch better off to the left. You will probably hesitate to trade this contract if you are someone looking at trading few lots of Nifty. But check what's hiding under the hood here by opening level 3 data. As you can see, there are many contracts available, but they are not visible in the regular market depth. In fact, the bid and offer quantities are heavily concentrated below 8th row respectively. Given the availability of contract in this strike, the perspective to trade or not completely changes and will not depend upon your trading strategy. Given the availability of contracts in this strike, the perspective to trade or not completely changes and will not depend upon your strategy. Execution control. Level 3 data gives you full visibility of the approximate execution price for your trade. This is particularly useful when you decide to scalp the market. Level 3 data gives you full visibility of the approximate execution price for your trade. This is particularly useful when you decide to scalp the market. Scalp the market. You trade large quantity, that is buy and sell large amounts in quick succession to profit from small tick moves in stock. Since these are quick trades, you place market orders only. Let's say you want to buy and sell 5,000 shares of Hindustan Zinc. The regular market depth window gives you the following information. As you can see, there is no visibility on how this 5,000 shares will get filled. Now take a look at the 20 depth window. The 20 depth window paints an entirely different picture. It not only tells me that I will get the 5,000 share but also gives me information about the approximate buy price. If I have to place a market order for that, I will be buying this order. I also see at 211 there are 2425 shares available, so I can expect the average price is at around 211. Now my decision to scalp the stock should depend on the pop and expect or and about 211, maybe 211.5 also. Of course, you will get the exact break even post charges. Level 3 market window plays a critical role in guesstimating the number of shares to trade. Given the liquidity of the stock, for the sake of this discussion, we will assume that availability of capital is not an issue. Now have a look at the regular market depth. You expect the system to move from 165 1675 to 1690 over the next hour. So given the fact that you are not constrained by capital, how many shares will you buy for this intraday trade? The regular market depth window suggests that you can buy 175 shares. However, the 20 depth, in fact, the liquidity in this stock lies below the by bid and ask, and the impact cost is reasonable. The regular market depth window fails to capture this information, assuming you intend to buy about 1500 shares. The buy price will lie somewhere within 167 to 16 which is spread of 0.149%. In this case, assuming you are sure about the target price, you can go all in and buy through whatever is available at the moment. Order placement. You can extend the position sizing concept, and here the 20 market depth market was to place a stop loss or limit order, assuming you have an intraday buy position in VST dealers. The question is where you would place the stop loss for this trade. In the 20 market that help us with this, of course. Have a look at the 20 depth window, or as you can see, there is concentration of bids in 1 to 90. The good part is that number of order count is also highest in 35. This implies that several traders have placed an order at 1 to 90, indicating some sort of price action at that level. This perhaps build a case for placing a prudent trader would probably place a stop loss not at 1290 but maybe at a price just below it. So as a buyer and so as a buyer in this stock then purely based on 20 that I will probably place my stop loss. मला समजून नाही राहिलं एवढं चांगल्यानं फील नाही होऊन राहिली समज जाएगा धीरे धीरे. Validate the support and resistance level. I find this extremely interesting. In the example, we identified 1 to 90 as a stop loss simply because there was a concentration of bids. In other words, we expect 1 to 90 as a support price. If this is indeed true, then it should show up on the chart as well, right? सपोर्ट कसं झालं बे तो म्हणजे तो म्हणताय की या प्राइस वर गेला या प्राइस वर गेला तर वरती गेन रेजिस्टन्स होणार बरोबर 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 कळलं कळलं म्हणजे तो म्हणताय मी अगर कितीवर आहे मॅक्झिमम समज मी 1310 वर घेतला आता तो 1290 वर तो सपोर्ट दाखवत आहे म्हणजे इथे सर्वात जास्त बाहेर बसलाय म्हणजे प्राइस इथे आले तर खूप सारे बायर्स स्टॉक घ्यायला चालू करेल खूप सारे बायर्स स्टॉक्स घेणं चालू करेल 1290 वर तिथून प्राइस वरती पण जाऊ शकते पण अगर 1290 च्या प्राइस 1290 च्या खाली प्राइस गेली समज 1287 तर हा आपला स्टॉप लॉस बनते कारण की ते बायर्स होते आणि बायर्सने घेतले नाही. Clearly there is some price action around 1296. Remember, support and resistance is not one price point, but rather a range. Therefore, 1290 1300 market as an intraday support for the stock. This is a perfect example of seeing the price action concept play out in the market. Another way to look at this is firstly to identify SNR levels. Let's check the 20 market to figure into their concentration of bids. Hopefully by now you have understood to appreciate the immeasurable value of 20 that order book brings to you while trading. Remember, irrespective of which technique you use to develop a point of view, things boil down to price and the action trades. चलो भाई अपना ये बेसिक वाला तो निपट गया अब अपन कल से टेक्निकल एनालिसिस चालू करेंगे. ये वाला पढ़ना है ये सब मैंने पढ़ लिया है ये पढ़ के होगा, ये पढ़ के होगा, ये पढ़ के होगा। यार देख तो कुछ पर ठीक है। अपन एडिशनल वॉल्यूम्स इंडिकेटर भी हो गया था थोड़ा सा, ये वाला पढ़। Plain trading is now available on card. Here is हा गोष्ट करून राहिलो. चलो कल मिलते हैं, बाय बाय।